I'm originally from the UK, but have been working in financial services for the last 10 years, and the last 5 years of of that has been in Hong Kong. When I first started out, I did learn um, both the mortgage side of the business and financial planning, which actually was partly what inspired me to get into helping British expats and overseas investors financing their property purchases with Cedar Crest. I was and am still currently um, working on the financial planning side of the business as well. What we would see is that we would pass clients directly to banks in the UK and found that they weren't getting a particularly good service, or banks themselves were not very familiar with dealing with expats or overseas client, which led to a poor experience for the investor. I think because of my background in both financial planning and mortgages, I've been able to offer clients a more strategic point of view when planning to buy property, and not just be 100% focused on mortgage product and interest rates, but also bringing in how does that fit into your wider financial planning needs as well, has enabled us to develop a unique proposition here in Hong Kong. I think what's unique about Hong Kong in particular is that Hong Kong Hong Kongers in general are probably more entrepreneurial than the average person in, say, the UK, for example. So that there's more often or not, we're dealing with business owners rather than employees, and they might have particularly complex income structures, for example, which makes it harder for a client to go directly to a bank and find the right mortgage for them. On average, the complexity of helping clients in Hong Kong is higher compared to if we were a standard mortgage broker in the UK. I think the most rewarding part is obviously helping clients get a finance product or mortgage product that they're happy with, and they're happy with the interest rates and they're happy with the terms. But that's just the first part. The second part is actually delivering the mortgage with a high level of service. It's definitely very rewarding when everything goes to plan, when we can get the mortgage approved quickly. We take all the legwork and stress off the client's hands, and they can really feel that. So yes, when everything goes to plan and everything completes on time and they're happy with the mortgage product, it's actually, yes, quite rewarding. Interest rates have sort of remained higher than everybody was expecting, especially since the recent Labour government budget. We were sort of expecting interest rates to fall, but it hasn't happened as quickly because of I guess some of the negative consequences of the budget. But we're still confident that we will see some steady decreases over the next year or two, hopefully. From an overseas buyer perspective, there's or definitely from a Hong Kong buyer perspective, historically there's always been, Birmingham, Manchester, London as popular destinations for people to buy property. Over the last few years, definitely buyers in Asia have been shifting. Those cities are still strong, but then they're becoming more familiar with the UK market and exploring other cities. So you're seeing places like Cambridge and Kent become popular, especially for the people that are planning to move to the UK. But also we're also seeing a transition away from a lot of buyers just buying off-plan new build properties, towards more and more actually researching becoming more educated on the market themselves and buying in the secondary market as well. I think, as I mentioned before, I think interest rates have been stubborn in terms of how quickly they've come down. There's still lots of activity in the UK property market, especially in the owner-occupier market. But I think with investors, especially investors in Asia that tend to be more cash rich than the average person in the UK, they're maybe being a bit hesitant or waiting to see if rates will fall before they make an investment decision. Rates have come down a little bit from the peak in 2023. people are still hoping that they're going to come down much more before they make an investment decision. But I think what's important to think about there is that actually there's still an opportunity cost of waiting and not making a decision, and potentially paying higher interest for a short period rather than waiting and not buying. What's important to consider about the UK market is that it's very regional and region specific, and different regions have different pros and cons for buying, and you can find a good investment in, you can find a good investment in London, you can find a good investment in Birmingham, Manchester, but they're different types of investments that will suit different types of people. And I think it's also really important that it's not just, you can't just buy any property in a good location and it's going to be a good investment. It's really also property specific, and especially if you're buying in, say, an apartment building, it's really the quality of the development and the builder behind it is also really important in how the investment will perform. So on that, I would always say get help with a sourcing agent or a real estate expert if you're looking for, rather than trying to do it alone and research the market yourself. If they've had a mortgage before when they used to live in the UK, they'll be shocked at how different the process is, or how difficult it can be even for a British citizen. As I mentioned before, business, if they're a business owner, they always have more challenges because there's less lenders available and they want much more documentation in terms of not just personal documents but also documents around the business. But if I could give one specific challenge that really stands out, it's probably keeping all the different parts of the process moving all at the same time, to ensure that the property purchase actually is smooth and actually goes ahead, because there's property agents, lawyers, lenders, potentially tax advisors as well involved. And for somebody that has never bought from overseas before, it can be overwhelming. So I think really having really trusted experts in all of those areas, and someone like a mortgage broker really driving and pushing all the different parts of the process, is what's going to help with that, or what's going to help overcome that. Obviously, some lenders won't lend to foreign nationals, and there's many that will as well. I think just in terms of documentation requirements, it will tend to be quite similar. I think where it might differ slightly is that if it's a Asian investor or overseas investor that has accumulated their wealth in maybe a way that isn't so familiar to UK banks, for example, business owners' inheritance from families. The UK banks have to understand the story of the client and understand how they've accumulated their wealth. If you're showing banks documents and things like that, it can be quite unfamiliar to them. So it requires us to sort of step in and understand the client really well and build the story in a way that the banks understand as well. So it's foreign income is going to affect an owner-occupier mortgage more, or self-use mortgage as it's always also called. Sorry, if you're paid in a foreign currency, the bank is going to deduct a certain percentage from your income as a risk management measure. So if you're buying for a property that you're going to live in the future, or as a second home, but you're still overseas, that can make it more difficult to borrow as same amount of money compared to if you were earning in GBP living back in the UK. So yes, I would say affordability assessments are harder if you're paid in foreign income. For a buy-to-let mortgage, they still do the same thing. They still deduct from your income based on the currency you're paid in. But because a buy-to-let mortgage approval is heavily reliant on the expected rental income in the UK, it has the fact that you're paid in a foreign currency has less of an impact. I think the biggest misconception is that you can't get a mortgage if you're an international buyer. I think that's the first thing that most people assume. Obviously, it's not true. That's why we're in business. A lot of inquiries I get, especially in Hong Kong and Singapore, is asking, can I get a mortgage based on just my the value of my assets rather than my income? And the answer is yes. That's That's still possible with some like high value lending with private banks. But for your typical sort of average case, you're going to need some kind of income for a mortgage approval. They can't lend based on the value of properties you have in Hong Kong, for example. That is another big misconception, that self-employed or business owners can't get a mortgage. And yeah, I would say yes, there's less lenders available compared to if you are employed. But there's definitely solutions out there, and we work with business owners a lot. What is useful to note, or maybe that's another misconception, is that business owners may think that they can only borrow based on the money that they take out of the business as income. But actually, especially on sort of higher value cases, banks can take a sort of overall view of your business and understand, okay, how much turnover is the company making? How much profit have I kept in the company and not taken as income? And things can be looked at in a more practical way if you're using a specialist lender, rather than just saying, okay, how much money did you take out as a salary? Using a property agent or buyer's agent that lives in London or knows London very well, for example, is really key, especially if it's your first purchase. Speaking to a broker at a really early stage is also important, because the last thing you want is to get quite far into the process and then your expectation about what you can or can't borrow is kind of way off to the reality. So getting in touch with a mortgage broker, even at the same time or even earlier than you speak to, say, property agents, I would say is sensible. People often think that they need a really high credit score to be able to get a UK mortgage, and that they need a quite significant credit profile before they get a mortgage. So that's not the case. I mean, it is possible to get a mortgage with completely no credit footprint in the UK as well. But what tends to be the case is that the lenders offering the better interest rates and better products do require you to have some kind of UK credit footprint. So whether that's an existing mortgage or a UK credit card or bank account, that's going to help just get you into the system, so to speak. But actually, the actual credit score is not so important. It's more about the bank's understanding what obligations do you have and do you make those payments on time. I think the biggest thing to be aware of is that stamp duty is higher for overseas buyers. So that's the tax that you pay when you purchase a property. So I think people can often get caught out by that. If they just go online and use a stamp duty calculator, for example, it might not take into consideration that you're based overseas. So I would always make sure you're using one that can calculate for overseas buyers, or go directly on the government website. In terms of legal considerations, I think it's important to point out that obviously you'll need a lawyer or a conveyancer to help you purchase the property. They're legally obligated, as are the lenders, to understand the source of wealth of the client, which can go back as far as 12 months in your bank statements. So just being prepared to show your source of wealth for the money that you're using for the deposit is going to make the process quicker when you're actually buying a property.